Are you bullish on equities right now?
So it's great reporting by Joe. Look, David is right. U.S. yields are now attractive to foreign buyers, not just from Japan, and to liability matching flows. So there is a self-correcting element in the marketplace. He's absolutely right on that. What is uncertain is what does the Fed do? And think of it this way, Andrew, we're going through an economic regime change. The U.S. economy is accelerating, will continue to accelerate throughout the year, both on private and public sector activity. And what's not clear is what will the Fed do? And that's the interesting question back to David, is what do you expect the Fed to do here? Does the Fed start signaling taper? Or does the Fed go all in and reinforce the flows coming from the rest of the world? That is very important for how you feel about stocks here, Andrew.
Well, answer that question yourself. What do you think is going to happen?
So I think we are going to continue to see the rotation we've seen. I think that what's being repriced is what I call liquidity risk, not really interest rate risk or equity risk, but liquidity risk. So the names that have benefited enormously from all these liquidity inflows in relative terms are going to underperform, and the others will start performing better. Now, the market so far has done this in a very orderly fashion, and that's important because the one thing the Fed does not want is disorderly markets. So I'm all in there for the relative trade. I think the relative trade is pretty obvious at this stage because of what's happening to liquidity conditions, or to be more precise, people's confidence about liquidity.
Okay, what about Tepper's bullishness on Amazon, which has benefited both by the pandemic and arguably liquidity as well?
Yeah, I said it last week on CNBC. There will come a time when the FANGs are going to be really attractive because their longer-term prospects are very bright. I don't think this is the time. I think that there is a lot of liquidity sloshing around in there that's of a temporary nature. But he's absolutely right. The fundamentals of Amazon are really strong, as are a number of other big tech.
Joe?
Just to put guys, thanks, Andrew. Put a little meat on the bones. David sent me some really detailed analysis on the currency hedges. The dollar hedging costs collapsed significantly, and the numbers on the U.S., the 10-year U.S. Treasury at 160, 1.6. Currency hedged U.S. Treasury yields for Japanese investors now 109 basis points. That's a flip. That's a flip, highest in 5 years. More importantly, the analysis points out that even against the 30-year JGB, you get U.S. Treasury yields 40 basis points higher than that and higher than hedged European yields. So all this together, Mohammed, have you seen numbers like that make these suddenly at 160? You can't believe that's a great yield, but when you look at it globally, that could attract assets here and flow here, and could strengthen the dollar as well, weaken the yen, which could also have its own effects, or positive effects on our markets here.
Yes, Joe. So I would add to that the 10-year differential between the U.S. and Germany is up to 190 basis points. It was 110 a few weeks ago. So we've seen major move in relative yields that favor the U.S., and that is why the dollar index is over 92 today. So it is all consistent, right? There are self-correcting flows in there, and the liability matches. So those of us who look at flows are seeing that the U.S. is much more attractive right now. But I want to stress, I don't know if you asked him, what is David's call on the Fed? Because that is really important here. The Fed has been the biggest buyer of U.S. Treasuries. So what the Fed signals is going to be really critical.
I'm in touch with him trying to figure out how we're doing on this. And it's funny, I guess he anticipated your question. He says, unless markets go down and financial conditions tighten, I'm going asleep on the Fed. Wake me up in September. So I don't think he thinks there's... Yeah, go ahead.
So, Joe, that is a critical call. If you think the Fed just goes to sleep, stays as is, doesn't indicate any concern about overheating, then David is absolutely right. I think that this is a really tough position for the Fed. I've said over and over again, be careful of the lose-lose situation for a Fed. And that's where it is now. Because the other side of this is that the U.S. economy, especially after the jobs report, after personal income, after manufacturing, is really kicking on a lot of cylinders right now. And we're putting another 1.9 trillion, plus it's going to be the second fiscal package. Can the Fed really just continue as is? If I was in the Fed, I would not, but this Fed has surprised me over and over again.
Shepard Smith here. Thanks for watching CNBC on YouTube.